Hello guys. In this video I will try just to give you some concepts about earning date. Okay, you understand that some stocks are very sensible to earning dates. It means each 3 months the company will announce the earnings for each share, which is called EPS. Now the analysts say, for example, that let's say, just an example, okay, let's say Facebook will get $1 for each share. It means this is the profit. Now the company announces after the market close, or during the market, or before the market, it depends on when they announce, and it says that they make $1.50. So they make a lot of money compared to the analysts. Most of the time the stock will go up, but this is not a sure thing, because last time, as you can see, Facebook has good earning dates and it's better than what the analysts say, but Facebook go down. So why? It's just because there is no sure thing. Okay, stop thinking about that there is something about the market or about Facebook or about anything else. Okay, so it's just the market. Now there is another guy who sent me a private message in a stock about 8 p.m. It means after the market has closed, and he was so happy that his stock is getting like 14%. We have a gap up, and he told me, what do you think tomorrow I should do? Okay, this is a guy who saw that after the news it was good news. Now I told him, okay, for me I always sell before the market open. I always do. Okay, now this is just opinion. When you take my opinion, understand that sometimes the stock, when it opens, it goes more higher and higher, and this is what happened. The stock was like was up in the day after the news. It was 14%, and then when I check it at the end of the next day, I found it 28%. It's double. Now I told him there are 3 things. There is no ways. There are only 3 things you can do when you buy a stock and it's going up like a gap up in that day after the market close. Next morning, what you should do, there are 3 things. Either you sell all your shares, or you sell half of your shares and you leave the other shares. Let's say you buy 200 shares. You sell 100 shares and you leave the other 100 shares. Or you leave all your shares until the end of the day and you see it might be going up and you make more money. Now this is all depend on you. It doesn't depend on the market, because you will never know. Sometimes some people, you have a very large gap up, but they lose a lot of money. Although they make money, but they lose a lot of money because short sellers come in the morning and they hit it and it goes down. Sometimes the market, when it opens, it goes more than expected, and sometimes it stays the same, doesn't go that much. Okay, so if you ask me what should I do, it's you that you should choose, because trading stocks or swing trading, as I see it, is you should choose between many variables. You should choose. Now If you tell me, if I don't know to choose, no, you should choose. You should learn how to decide by yourself. Because for me, if I tell you, sell your shares, okay, in that stock, in the morning, it goes so good with that day. Okay? Let's say, I just give you an example. Let's say the stock was $20. After the market close, we saw that there is a gap up and it is $25. Now the next day it is $25 and you don't know what to do. As I told you, either you sell all your shares with $25. Let's say it is $25. There is no change before the market opens at 9:30 a.m. There is no change, and you see 25. It means 5. It means you have 25% of your money profit. From 20 to 25, it is 25% money. Now, either you sell with 25% or you sell half of your shares and you leave the other half because you are scared, or you leave it until the end of the day, it means, and you see what will happen after that. Let's say the stock goes from 25 to 30. Are you going to regret that you sold your stock at 25 and the end of the day it is $30 and you make 50% of your money? Are you going to regret? It means to say, I was stupid to sell my shares in the morning. Why I shouldn't keep all these shares and get 50% of my money? I am stupid. No, you are not stupid. Because what if the stock was 25, when the stock market opens it goes to 20 again? There is a gap up, but the whole day it was a red candlestick. It's going down. What do you say at that moment? You say, oh, I was so clever, I was so lucky that I sold my shares at 25 because now they are at 20. So, okay, so understand that you should take this this idea of pain and regret when your decision was not good. Okay? Because no one knows what will happen after the earnings. So try to accept what the market gives you and decide either to stay in the trade or to exit the trade. Now, what if we have a gap down? Okay, you get gap down. When you get a gap down, it means you lost money. This is very simple. Now, sometimes when the stock market opens, it goes up again. Just to fill the gap up, the gap down, it goes up a little bit in the first minutes, and then it continues going down. So here you have choices, either to sell on the opening at 9:30 just to sell your money to sell. If you want to wait, you should be a day trader. It means you should see where the stock goes, or you can put stop loss at that time in order to exit at any time. So there is not much you can do when you have a gap up. Okay, so and your choices is either you sell before the market or you stay until the market opens and you see the first minutes. Don't wait too much, because sometimes it goes up because the people who short the stock want to get there to cover. It means to buy shares back in order to exit the trade, because they make money because they short the stock. Now you you can see if the stock goes up a little bit, you can just sell at that time. After a few minutes when the market opens, at least you reduce what you have lost. Okay? Now, there is another thing that I will suggest is, if you are scared of earning dates, don't buy stocks before the earning dates. This is very simple. You are scared, you have a gap down and you lose a lot of money. So, don't buy stocks before the earning dates. It's very easy. You can just go to the earning dates in Yahoo Finance or any other website and check your stock when we have an earning date. If you like the total risk, you go with the trade and you buy the trade and you stay with this thing. Now, there is another thing I will tell you. Most of the time, after, especially when the market closes, you can buy and watch your stock. It will be volatile, but you try to see if the stock is going up or going down. If it is going up, you can even sell, because the people who buy, they buy directly after the news and they take a decision. Is it good or is it bad? If it is good news, they buy, and you see that the stock is going up after the market close. Okay? So, you can sell at that time with a profit. One time, one of the guys, like at 4:30, before the market opens, before the market close, he bought Facebook, and then after a few, like half an hour, he was watching and just waiting for the news. Now, he saw that the stock has gone 5 points. It means $5. Let's say it was 60, it goes to 65. Just an example. At that time, he sold his shares without waiting for tomorrow. He doesn't care. It is like a day trade. It's not like a swing trade. He say, okay, I'm getting $5 for each share I bought, so I'm just doing day trade. So he closes his trade by a limit order, and understand that you can't use what we call a stop order after the market close or before the market close. You should use what we call a limit order. If the stock is volatile, it means a lot of shares traded. You find that the bid and the ask, they are near each other. It doesn't go that far. So let's say if the stock is the bid is let's say $60, and the ask is $60, 2 cents or 5 cents or 3 cents, it means it's not that far away. So you sell your shares and you exit the trade, and you do what we call a day trade. You don't do a swing trade, you do a day trade, because you just buy and sell in the same day. Okay? So these are some recommendations and some ways to behave towards these earning dates. And if you are what we call an investor, you don't care that much if your stock gets a gap up or gap down, because you think about the long term. You don't think about fluctuations, about what the market will do for this stock. And this is where the investors, they think about the long term, many years. He knows that this company is so good, and he thinks that the company will become bigger and bigger and bigger, and he thinks that the stock will go bigger and bigger and bigger, as Warren Buffett do. It means he thinks that the price of this company is not so good, but it will be good because the company will become bigger and bigger and bigger, and a lot of mutual funds, they will buy this company and he will make more money. Okay? This is just how how some people value the company. He doesn't care about swing trading or day trading because he doesn't do, because he bought a lot. Understand that some people, when they buy, they are big traders or big investors, they buy million shares of a stock, or 500 or 10 million shares. It means they buy a lot, although they are just people. Okay, they are not big hedge fund or big mutual funds. Understand that some people have money and they do trades according of what they think about the company. Okay, and here, when you are an investor, don't waste your time looking at gap up, gap down, but investors, they have the ability to check each 3 months where your investment is going. 3 months, 6, then another 3 months, then another 3 months, and then you check. If you don't feel comfortable with the stock or with company that you are, and you see that you begin losing a lot of money, some people, they exit and they watch. If the company comes back, they will buy it again because they think it's just some sell off, and then it can go back again. But understand that some companies, they will never come back, and some companies go bankrupt. Understand that. This because before, someone who was my student, and he told me that he bought a company with $250,000. It means he buys shares with $250,000. Some people, they invest and they have money. Now, the stock was going down. He's looking at the company going down, but he think like don't worry about it. Don't worry. But after a few years, this company go bankrupt. Do you understand that he lost $250,000? Now if you lose $200 or $100 or $5,000 or $1,000, you begin crying. You begin you say some people in the market stole my money, and the market but some people, they lose too much, but they become calm because they do mistakes. They do mistakes and they are wrong in a company. And some companies go bankrupt. Okay? So this is all about earning dates. If you are scared, don't trade before the earning dates. It's very simple. You are scared, don't. Why you should do, why you buy a stock and then at night you can't sleep? If you buy a stock and you put too much money before the earning dates, and you just hope, you say, I'm just hoping, you go to the church, or you go to the mosque, or you go to your pagoda, or you go to any and you ask God about this, okay? And you just sleep and you think that God will fulfill your wishes, okay? Or the market will fulfill, understand that you are doing a business, and understand that you should take care of your business as you are asked to do. And I have given you before the example of a store that you leave alone. If I tell you, if you have a store, you have grocery, for example, and you spend $100,000 putting all that stuff, fruit, vegetables, and groceries, and a lot of stuff, you put it there, and you say, let's try and to see if people, they put money, they take something and they put money in the desk, or near the price is there, they put just money. Understand that this will never work. Some honest people, or few of them, they do what you ask them to do, but a lot of people, they loot your store and you will lose all your business. Why? Because you don't control your business. You should control your business, see what you are doing. If things goes around you, you should do something. If you buy stock and it's going against you, you should do something. Because if you don't do something, the stock goes down and down and down, and all your money will be gone. This is a normal thing. This is a logical thing, but some people, they don't understand how risky is the market when you don't understand the whole picture. Okay? You should understand always what you are doing. When you exit, when you buy, you should understand this before you do the trade. And this is what we call to plan the trade. Understand what are your risks. Okay? If you are going to the army and there is a war, and they give you, let's say, $2,000 a salary, it's just an example. But understand that if you are going to the war and the place that you are in, there is a war, you understand that your risk is you risk the whole life for $2,000. If you have conviction and you are a patriot, and you are thinking you are defending your country, this you understand first the risk that you might die. So is it okay to die? You say yes. Okay, I'm defending my country. Okay, so here you are okay and you understand what will happen to you. Some of the people, they don't think that something will happen to them. Okay, they see they are strong, they have weapons, they go to a war. Some people, they come handicapped, or they become fool because of the events, or some people, they lose some limbs and something, and some they are hospitalized, and other people's died. Okay, so you should understand, are you okay, in order not to regret later if you are still alive. If you die, okay, you go to another world and you will be having stuff there. Okay, I'm not speaking about this in this video because I'm not speaking about religion, but I'm speaking about risk. Whenever you do something, you should think about risk. What is my risk? That's it. If you understand and you are okay, that's it. So the earning dates is what I explained. Please, if you have other suggestions, you have other opinions that I haven't mentioned, please share with us. Or if you have some issues, send me a private message and let me know, and we can discuss this in private. Thank you very much and have a nice day.